Joel scouting out the variable rate update. So what is current situation as far as variables and fixed rates right now? Pretty status quo. Not a lot of difference on where rates are. Next Bank of Canada being December the 2nd, so that's the last one obviously for the year. I think the prediction is 0.25%, and I think static for some time. We do see some data, whether you call it good or bad data, that inflation has significantly cooled both in the US and Canada. Secondly, a big statistic that's been delaying, calling things in a recession is job growth, and we definitely see the wind out of the sails from that perspective. So I think that seems to be really the way we're going to go here. Two things I want to highlight for you. If you have a mortgage that is a variable rate, the payment doesn't change, you may be getting emails and calls from your banker branch, Coast Capital, TD, even if you didn't get the mortgage trust, CIBC, BMO, RBC, all those folks do this type of mortgage. Basically means that your payment doesn't change, but your interest principal rate changes until you hit a trigger rate, which you're not even covering your interest on your payment. So if you're worried about that, you're getting a call where you got to go up by $1,000 or $1,500. I've drafted an email this week that we can send out. You can send out to your branches. I can't do it myself, but if you are getting called for it, I've drafted an email and some options you can suggest. So for example, there is a 40-year option that OSFI does allow. The branch does need to approve that, but there is. They definitely have the capacity to not put your payment up so high. So if you're worried, you've got a trigger rate call, you're worried about that, reach out to me for that email, and we'd be happy to help you with that. The last thing I want to leave you with is that, I really want to, challenge that it's important to think about here is that it does appear that, despite our best guesses and despite our best hopes, we're in a higher rate environment. And I know I've said that a few times, but I really am concerned that, the only, and I've probably said this 100 times, the only call we get on a variable is locking in a fixed rate, which, often we don't recommend that, but, we almost never do. But even at that, you're not going to outrun a rate environment. Whether you're coming for renewal, fixed rates have been high since beginning of year. These are inevitable realities you have. And so if we have a higher payment on our interest rate, and I'm saying 5 and 6%, you need to be able to fit these into the household budget. And so that means that you have to look at some ways to increase income or decrease expenses. Now, one thing that we've highlighted on a few times here that I think is important is if you have any debt that you cannot pay off in 30 to 60 days, or you have a big lump sum coming, it is time to think about rolling that into something. Now, where a lot of people get messed up is they think, oh, I'm going to do a refinance to have me lose my existing rate. Not necessarily true. That might be one option we look at, but there's a lot of ways we might roll your debt into your mortgage and lower your payments for that matter. I'm always baffled by people, we might do a second mortgage at 12%. Oh my gosh, that seems crazy. But, with credit card debt, 35%. So if you're someone that's calling and saying, oh, I can't afford my payments, and you're carrying some debt, we need to start there first. So if I can help you with anything, let us know. Please do share this with whoever you know. It would also really help us right now if you subscribe to our channel. We're sending out videos on a whole bunch of topics right now, so hopefully that can be helpful to you. Have a great week.